Markets with someone who's got some skin in the game, and that would be our old friend Lee Munson of Portfolio Wealth Advisors joining us now. Lee, good to talk to you.
I'm glad to be here.
All right, so we got to get your thoughts on it. Yesterday, we saw the bull market setting a milestone. According to some people, other people said it was not the longest bull market without a correction. What say you?
Oh, I'm in the we had a bear market back in October 2011 camp, which, I know that's not exactly new news, but when I look at broader markets, I don't really see this as something that's been going on for almost 9 years. That doesn't matter, though, right? All that matters is that we're making money right now, and where we're going to start rotating to, because the S&P is dear. I mean, look at that chart right now. That's a beautiful chart, right? But the bottom line is that I want to look at places that also have some relative value. I'm not saying that there are cheap areas, but there's a hell of a lot cheaper areas to go invest in right now.
Well, last time we talked with you, you were pounding the table on emerging markets. Is that a trade you followed through on? Is that one you still like? Are you still hot on some of these names?
I did. I actually, over the last couple of weeks, I forgot the day, I think it was a Tuesday or so before, I did actually do those buy-ins. Now, last time I was telling Jen that I wanted to see emerging markets down, like 18, 20% before I really started going in there and pounding on it. I actually got in there about down 15, 16. You can see that in August, on the chart that you got up there, that last little, the second to last little dip down there, that's when I was buying it. So why didn't I wait for a full 20%? Well, here's the thing. I was taking off. I also told you guys that when I saw the S&P at 2850 to 2900, which has happened over the last few weeks, I was going to take profits on those overweights from the overweighting U.S. stock I did back in the February correction. So my thought was, hey, I got the S&P in small cap exactly where I want it. I want to take profits. And so I decided to put those dollars into emerging markets down 15, 16%, which was good enough at the time. And then I also added to my positions of international value that were down a whopping 12%. I love that sector, big dividends. By the way, everybody, you don't buy something for dividends, but it's certainly nice to have and tell your clients when you do buy them. So I made that relative swap a couple weeks ago. I've been very happy with it. Yeah, look at that puppy right there. Down. Well, I mean, look at the last 10 years, none of these markets have done anything.
Right. I mean, emerging markets is a space that we've talked about a lot in recent weeks. Of course, the financial crisis happening in Turkey. Are you worried about things like that, or is that something you expect when you go into that space? It is a noisier space relative to kind of just U.S. plain vanilla stocks.
Oh, God, that's why I'm in emerging markets. High volatility, high return, most of the time a good hedge against inflation. It pays dividends on par with small cap U.S. stocks. I want everybody, we should tell everybody, Turkey's going to be contagion. So everybody dump your emerging market stocks, because Turkey, this illustrious powerhouse of growth, is going to bring down the 21 to 25 emerging markets that we talk about. Of course, it's just a bunch of damn noise. I give a rat's ass about Turkey. What I'm really concerned on are the big ones. I'm concerned about China. I'm concerned about the debt in China. But it's fine. I'm concerned about Brazil, India, those big countries. Russia, I don't care about. So it's a bunch of noise. And I don't really think that's what brought emerging markets down. I think it's obviously due to this recent decline in the dollar. So I love any type of noise that will bring it down. I mean, come on. That chart that you're showing right now, that chart is no different than the general emerging markets. We've already had in June the big blow up in China. And you can see that chart consolidating. So I don't care. I'm just in it to win it.
There you go. I want to talk to you about another story that was a lot of noise for a long time and now has reached something like a conclusion. That, of course, would be the Aramco IPO. We saw yesterday they're not going to go public. But China actually factors into that a little bit in your view. What's kind of the deal with that? Because I feel like I've been hearing about this story forever, and I just didn't find it that interesting. And now I'm glad that we can just move on from Aramco.
There's some consultants out there that are, a lot smarter than me that have this thesis about why Saudi Arabia is going to be this huge market. And I get it. You've got this younger population. You got some reform with the new guy running the place, and it's fine. I have a couple clients that wanted to buy some Saudi Arabia ETFs. That's fine. But here's the thing. I got to see some of the financials on that, along with everybody else, when they leaked earlier this year. And all we see is a bigger, fatter, slower version of Exxon that just has, it's unique, it's interesting, it's never been available. But I wasn't that impressed. I wasn't going to be like out there looking for shares. It makes a lot more sense for them to sell privately to someplace like China to get a better valuation than to float these shares. Because I'm telling you, as soon as you float those shares, you're going to have to tell people what the numbers really are. And I don't trust them to give me the right numbers. So I think it's really no news. I think this is just, I hope that they don't sell to China, right? Because we want that oil.
Right.
Why let China have first dibs on it? So that's why I was hoping that it would be a public thing so that, we could, Americans could have a little say in that. But the bottom line, it goes to the highest bidder. The financials stink. It's just big. Next story, please.
Yeah, well, we don't need the country of China buying the entire country of Saudi Arabia, I guess, which would be effectively what it is. Last time you were on, also bullish on banks. I want to get your quick thoughts there. We have Jackson Hole coming up this week. Next month, likely to get another rate hike. Anything you want to hear from Powell? Anything you don't want to hear from Powell?
No, I just want to hear something really boring. I want to hear what we've been hearing. I want to have him act like a cat. Today's like yesterday, and tomorrow's going to be like today. I want him to say that, we don't really need to accommodate that much, but I don't want him to say it too violently, right? And I think the fact that the ECB has come out and said, we absolutely need more stimulus, that's a huge warning sign. So I'm not really expecting a lot tomorrow, but I'm going to be listening because I'm a financial voyeur. I want to have some financial porn to look at tomorrow afternoon, and that's going to be Powell's speech. Unfortunately, I don't think he's going to deliver.
Right. You want him to be like a cat. I love that. I'm going to think about that more often in my own life. All right, well, Lee Munson of Portfolio Wealth Advisors, thanks so much for joining us, and I'm sure we will talk to you soon.
Absolutely.